It's Wednesday, August 28th, and this is Markets Daily, hosted by me, Jen Sanasie. On this show, we navigate the currents shaping the crypto markets, providing insights against the broader financial landscape. So, whether you're actively trading or simply fascinated by the volatility that is the crypto markets, this show is your compass to understanding what's happened, where we are, and where we're going. Good morning, everyone. Happy Wednesday. Today, we are talking about a potential comeback that has everyone talking. And unfortunately for me, it is not the comeback of Britney Spears, it is the return of DeFi summer. According to a recent report by Steno Research, decentralized finance could be on the verge of a resurgence. But what does this mean for investors? On this show, we are going to break it down. The report suggests that while the total value locked in the crypto ecosystem is still below its 2021 peak, we could see it climb to new all-time highs as soon as the first half of next year. Now, this is a bold prediction, so let's take a look at what's behind it. The report highlights that DeFi's resurgence is closely tied to interest rates, especially those in the United States. Now, you might be wondering why US interest rates. Isn't DeFi supposed to be decentralized? Isn't it supposed to be borderless? Well, the report says that the DeFi market is predominantly US dollar centric. This means that when US interest rates are high, traditional finance becomes more attractive because of higher yields on safer investments like bonds. On the flip side, when interest rates decrease, as they might in the near future, investors start looking for higher returns in riskier markets. Q DeFi. Now, there is more to the story than just interest rates. The report from Steno also points out a few crypto native factors here that could be driving the revival of DeFi. One of the biggest is the growth in stablecoin supply. Stablecoins serve as the backbone of many DeFi protocols, and since January, the supply has expanded by about $40 billion. That is a massive number. Now, analyst Mads Eberhardt wrote in the report that as interest rates decrease, the opportunity cost of holding these stablecoins diminishes, making them a more attractive option. So, why does this matter? If you're an investor looking into DeFi, this means the infrastructure underpinning these protocols is becoming more robust. With more stablecoins in circulation, DeFi platforms have more liquidity to work with, which can lead to better yields and more diverse financial products. This could make DeFi a more compelling choice for investors seeking higher returns, especially in a lower interest rate environment. Now, another factor driving the DeFi resurgence is the growth of real world assets, or RWAs. We're talking about tokenized stocks, bonds, and even commodities being integrated into the DeFi ecosystem. According to Steno Research, these assets have surged by 50% this year, indicating strong demand for on-chain financial products. For investors, this is a big deal. It means that DeFi isn't just about crypto anymore. It's expanding to include a variety of traditional assets, bringing more options and potentially stability to the market. And let's not forget about the Ethereum network, the blockchain most widely used for DeFi applications. Lower fees on Ethereum are making DeFi more accessible. High fees have often been a barrier to entry for many, but as these costs come down, more people can participate in the DeFi ecosystem. Lower fees can also mean more frequent transactions, more liquidity, and ultimately a healthier market. So, what does this all mean for you if you're already in the DeFi space or considering entering? These are promising signs. Lower interest rates, increasing stablecoin supply, growth in real world assets, and reduced fees all point to a more attractive and accessible DeFi market. However, it's important to remember that DeFi is still a high risk, high reward space. The potential for gains is definitely there, but the potential for losses is there too. As always, do your own research, understand the risks involved, and consider your investment horizon and risk tolerance. The crypto market, as we know, is volatile. And while the potential for a new DeFi summer is exciting, it's essential to stay grounded and make informed decisions. Thank you so much for listening to this episode of Markets Daily and coming on this journey with me to better understand the crypto markets. If you like this show and you love to listen to it every day, subscribe to the CoinDesk podcast network that is available on all podcast platforms. Give us a 5-star rating if you like the show. If you don't like the show, tell us why, and we will be sure to address it. If you like watching the show, subscribe to our YouTube channel, give us a thumbs up. Thanks so much for listening. We'll talk to you tomorrow.